The opinions voiced in this show are for general information only and are not intended to provide specific advice or recommendations for any individual. Investing involves risk, including loss of principal. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial advisor or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA SIPC. People of Chicago, you're tuned into In the Know Radio, a show about money, investing, retirement, and life with your hosts, Craig and Leslie Bolanos, co-founders of Wealth Management Group.
It's time, America. Get your game face on.
Put your savings to work and finance the lifestyle you want with real advice from real people.
You're emotionally tied to your money.
Separate the confusion from the facts to get prepared for whatever comes your way and get it right here.
You got to make sure you've got plans for a rainy day.
What's the number you need to live out your retirement dreams?
$60 billion.
Holy cow!
Wait, did Leslie really just say $60 billion? All you need to know is that Wealth Management Group is in the financial planning business, so you can be in the fun and retirement business. So get your retirement on, people. Their phone lines are always open at 833-WMG-PLAN. Now, here's Craig and Leslie.
Hey, it's a new year. It's a chance to have a new you. We need to make sure that 2025 is the year that you finally take control. You don't just get retired, you stay retired. We don't want you just to survive retirement. I need you to thrive in retirement. And that's going to take strategy. It's going to take plan. It's going to take a team of professionals all working under a fiduciary standard to represent you and your family. But you got to start with your part. And I want to help you do that. And that's why the beginning part of our conversation today is really just about the goal setting. And let's talk about this on the radio or in the conference room. 833-964-PLAN. 833-964-PLAN. Go out to our website, getretiredstayretired.com. So when you think about all these goals, it's not about, oh, I want to retire. Oh, I want to pay down debt. Oh, I want to save more money. We have to start with your meaningful purpose. We actually have to start with your why. Why do you want an improved condition? Why do you want 2025 to be better? Why is this stuff, this burning, relentless desire, that subconscious mind? That's what we have to unlock. And when we can have conversations that go beyond the cursory stuff, meaning going beyond, I want better investment returns. Everybody should, and you can have those. I want better tax strategies. Everybody should and can have those. But when we really untap that crystal clear, compelling vision of your future, that's what I call it, a crystal clear, compelling vision of your future, then we're in a better spot to actually start taking the steps to get there. So I ask you this question as you sit with it on a Sunday morning. If you could modify or improve, one thing financially, what would it be? And I know it just came into your mind. And you know what? That's what we should tackle. That's exactly what we should tackle. But speaking of tackling, let's get some basics out of the way. So at the end of the day, I think the new year is a time of rejuvenation. It's a time of renewal. And the first thing I want everyone to be doing, if you need some help, we're going to help you get it done, is I need you to commit that you're going to start building an annual net worth statement. And that annual net worth statement can be as complex or as simplex as you want, but you need to be in a position to track how your wealth is growing over time. And once you're done with that net worth statement, then you need to go ahead and create or have some semblance. Yes, I'm going to say it. It's that evil word. It's the B, which stands for budgeting. Because if you're not telling your money where to go, you're always going to be doomed to wonder where it went. Yes, you've got to make sure you're budgeting, because the whole idea of saving money for college, saving money for retirement, paying down debt, you have to have a command of your cash flows. And there's no possible way to have a command of your cash flows unless you have some semblance of a budget and you live within that level of awareness. And when you have a command of your cash flows, when you're intellectually honest about your budget, your income versus your expenses, which is essentially your spending, that's going to help you eliminate and move through these concerns or anxieties that everybody has around their finances. Because I got news, leading up to retirement and in retirement, it is not about assets. It is all about cash flow. Cash flow, cash flow, cash flow, money in and money that comes out every single month. Because when you've got sufficient cash flow, then you've got sufficient power of choice to do what you want to do, when you want to do it, in a comfortable, non-flashy lifestyle that's been carefully curated by you, which is what gets you up out of bed every day with meaningful purpose to pursue. Maybe it's pickleball. Maybe it's golf. Maybe it's your place of worship. Maybe it's getting involved in what I call local level grassroots community politics. It could be a million different things. I don't know. It's as unique as you are. But again, what we're talking about this morning is it's 2025. It's a time of renewal. It's a time to say no more. We're not going to wake up with a financial hangover anymore. We're going to seek improvement. And that improvement, again, starts, as I mentioned, with uncovering your meaningful purpose, uncovering your why. And if you want to talk about those things, we want to give you a pathway to do it. Go to our website, getretiredstayretired.com, or pick up the phone and give me a call, 833-964-PLAN. Now, a big part of the goal setting is I tell everybody, we talk about this in the office. We got to dream big. We got to have these big, hairy, audacious goals, right? I can't just have someone say, I'm going to retire. I can't have someone say, I'm going to create a vacation home. I need to really define what that's going to be and make it a big goal. And once we have that big goal crystallized, then our job is to help you make that smart, meaning we got to break that goal down so that it's specific, it's measurable, it's achievable, it's relevant, and it's time bound. Saying I want to save more money, that's too generic. Saying I'm going to put away this specific dollar amount, right? Which then in turn is going to be saved with this frequency, which then in turn is going to be deposited into this type of account, which then in turn is going to lead to a defined outcome after a sufficient number of periods that I'm going to be able to take this certain discernible action. That's where this whole thing is. You got to break these down. I think the other piece as we talk about these goal settings is we can't just talk about them. We actually got to write it down. Again, unlocking that subconscious mind is so incredibly important, whether you're taking pen to paper, ink to parchment, or whether you're keystroking in a newfound technology world, I do not care. But when you have this crystal clear, compelling vision of your future, the big, hairy, audacious goal, when you have the KPIs, the key performance indicators that you need to be hitting, those are behaviors. And when you can make it visible and you see it, then all of a sudden you just start working towards it. And you know what's great in today's environment? There's so much leverage to make it happen. Technology can get us further connected to our goals. Technology can build additional awareness and additional efficacy, the efficiency. It's about optimization. And technology can help us explore and develop what I call small wins. The other thing that helps is when you have a co-pilot. You have a partner. You have a team of professionals who walk alongside you, who get vested in your goals. Yes, the professionals get vested in your goals, where it's about this shared philosophy. It's not about us holding you accountable. It's about us giving you simple and sincere, actionable ideas that can help you realize that compelling goal. And I just want to have a conversation, and we hope that you do too. We're a phone call away. That's 833-964-PLAN, 833-964-PLAN, or go out to our website, getretiredstayretired.com. And if you listen to this show and you listen to this radio station, it means we have something in common. You, like me, we're information junkies and we love education because education leads to empowerment. And you know what? We probably also have an awful lot of similarities in terms of how we think and how we feel as citizens of this great nation, citizens of this great country, and what we're trying to maintain and grow and protect for ourselves and our families. And I think working with like-minded advisors is so incredibly important when you have an opportunity to do such. And that's what I invite you to do. 833-964-PLAN. That's 833-964-PLAN. Now, speaking of things, there's a number of takeaways when we look back at the last quarter of the year. And these are some takeaways from Q4 that really get us set up into our investment disciplines, which we're going to talk about for 2025. So you're going to need to stay tuned. And remember, the Dow, the S&P, the NASDAQ, all of these indices hit all-time highs in Q4, obviously with the tech-heavy NASDAQ once again taking the pole position. And that impressive performance was largely fueled yet again by the strength of technology stocks, particularly the Mag 7, the Magnificent Seven, which are those companies who today are primarily involved not just in AI, but generative AI, AI being, of course, artificial intelligence. And I think the resounding, robust performance of these indices underscores the resilience and strength that defined a market for investors in 2024 as it was powered by strong corporate earnings and impressive economic growth. But you know what? We got to talk a little bit about political clarity. We got to talk a little bit about the Federal Reserve. We got to talk about where capitalization-wise and geography-wise and asset class-wise you should be positioning your money to have a successful 25. But first, we got to pay some bills. So we're going to go away, and then we're going to come right back. You're listening to In the Know with VestGen Wealth Partners. GetRetiredStayRetired.com. More to come after this break.
In the Know Radio with Craig and Leslie Bolanos, where their goal is to pummel you with financial know-how until you say uncle.
All right, in that last segment, if you missed it, we talked about the goal setting that you need to have to unlock your meaningful purpose, your why, so that you too can have a crystal clear, compelling vision of your future that you can strive towards and achieve. And we're here to help you do it. But a big part of that is making sure you understand how to invest and where to be and what are the takeaways from Q4. We just got done talking about all the indices hitting record highs in the fourth quarter. But I think the biggest story, the good story, the great story is the political clarity. I mean, that 2024 election provided so much needed clarity. And how good is it that the election ended up not being divisive? The election ended up not going to SCOTUS. There was a resounding victory by President-elect Donald Trump. There was a resounding win in the Senate, in the House. And what that does is it should be ushering in this pro-business environment under the new administration. You know what that did? That absolutely boosted investor sentiment. Investor sentiment was boosted by that political clarity and contributed to those market gains. What's the other big takeaway? It's the Fed. They cut in September, but specifically, I'm focusing on the fourth quarter takeaways right now. The Fed cut rates twice in Q4. I mean, that's 2 quarter-point rate cuts aimed at continuing to support the economic growth and the soft landing. However, it's so critically important that everyone listen to this. The Fed, after they cut rates in December, did start to posture a slightly hawkish stance. And it's that hawkish stance, hawkish meaning they're not dovish. Hawkish, the opposite of dovish. They might not give us as much easing. They might not give us the rate cuts that we once hoped we were going to see in 2025. And that's going to temper some of the growth expectations that people are going to have. And it's going to change where the puck goes in the rink or where the money's going to move in the investment landscape. And that's why You got to look at the corporate earnings. I mean, again, the fourth quarter earnings, they're going to start rolling in soon. And gosh, they're going to be good. And they're going to be good because they're coming on the back of strong consumer sentiment. You did your part. I did my part when it came to holiday shopping. Black Friday, Cyber Monday, those were year-over-year gains, adjusted for inflation. So what does that tell you? People must feel confident that they could spend. So when you take that, I think people need to say, well, where do I allocate money to, right? We're talking about these fourth quarter takeaways and where capital should go. So when you're thinking about that 401k, you're thinking about that 403b, you're thinking about your IRA accounts, one thing I'm pounding the table on, I'm just not going to pound it right now because it's radio on a Sunday morning, is large capitalization stocks absolutely were dominant last year. And the truth is, that trend is likely going to continue. So one of the things you got to do is you really have to take a portfolio x-ray and determine market capitalization. This is huge, guys. It's not just about what you have in stocks, what you have in bonds, what you have in cash. It's about doing a portfolio x-ray and seeing what your capitalization is. Because if we're not going to have the amount of rate cuts that we once anticipated, if the inflation where we're at is going to stay sticky, then you got to continue to embrace those companies that are most solvent at this point in the market cycle, which is the large caps. And then there's something called style. Everyone's got a different style, but in the investment world, people sometimes break it down between growth and they break it down to value. Well, you know what shined in the fourth quarter? Growth continued to shine. Particularly, we acknowledged it earlier, those growth stocks that have strong ties to AI, artificial intelligence. And I got to think, if anything, you're going to probably want to continue to have an overweight to growth while you make plans for this soft landing in the industrial side of the economy that's going to continue to shine. So that portfolio x-ray is not just helping you with market capitalization. That portfolio x-ray is also going to help you with style so you can see where you're positioned, and you probably are going to want to be overweighted to growth. Now, foreign equities, everybody believes, it's tried and true, that building multi-asset class, globally diversified portfolios is a surefire way to have great long-term success and generate good CAGRs, compound annual growth rates. But if we're taking cues from the fourth quarter, which is what we're discussing right now, foreign equities completely retreated. I mean, if you look at what happened to both developed markets, emerging markets, boy, all of those indices absolutely struggled. I mean, in the fourth quarter of the year, EFI, Europe and Far East, and EM, emerging markets, they declined 8% respectively. And we all know why that happened. There was an election, and a part of that election is a discussion of America First. And a part of America First is about fair trade being from the point of view of those who are going to make the rules. And if there's going to be pressure on those trading partners, whether it comes in the form of big tough talk or whether it comes with talk and action, actually implementing tariffs, then investing globally isn't going to be an awesome spot to be. Couple that with another statement. The Federal Reserve cut rates in September. They cut in November. They cut in December. But they warned us in December that, hey, the economic data is coming in a bit hot. We might stay hawkish. You know what that means? That means Europe's still on sale, guys. So if you haven't gone and seen the Trevi Fountain and you want to go do the trifecta in Italy, or you want to travel abroad, the US dollar is probably going to remain strong, because I think interest rates are going to remain a little bit higher because inflation, the fall in inflation is kind of arrested. I just don't think you want to have a big global footprint. So not only do you want to use that portfolio x-ray to figure out your market cap, you don't want to just use the portfolio x-ray to figure out your style. You need that portfolio x-ray to really take a look at your weightings. I call it geography. Don't you want to be overweight the US dramatically compared to the rest of the world? Well, I think you can, and you probably should. Now, something else that's so incredibly important is lots of people can and should have bonds and fixed income in their portfolio. And if you wanted to outperform the aggregate bond indices last year, what did you do? You followed our playbook. And how did you follow our playbook? You maintained good investment grade credit quality, and you managed your duration, the average maturity of your bonds, to be shorter than the index. And if you did that, you were rewarded yet again, time and time again. And when you say to yourself, what's the playbook for 25? It's actually more of the same. The playbook is you want to have a duration in your bond portfolio that is less than the index. Okay. If the index has a duration of 6 and change, you want to probably be in the 4 to 5 area. I like 5. The second thing you got to focus on is, why do you own? Again, that question, why? Why do you own fixed income? Why do you own bonds? I think the people who own bonds, they're owning them not to create wealth. People are owning bonds to stay wealthy because you get great coupons, great interest payments, and when rates eventually go down, you can have the opportunity for total return. But you know what that means? Don't chase, don't risk. You should have an investment grade, high quality bias to your bonds, because your bonds are the ballast of your portfolio. And you know what you care about with bonds? You care about the return of your money, not just the return on your money. So let's make sure we really do bonds the right way. And doing them the right way is, again, managing your duration, managing your coupons, and being in a position to roll up or roll down the yield curve for reinvestment. And that's going to take a team of professionals to make sure you're lined, not in bond indices. You need to make sure that you have defined outcomes. That's target maturities. When you know exactly when you're getting your capital back, you know exactly how much interest you're going to collect along the way. That's where it needs to be done. We're talking about these fourth quarter takeaways and how they translate into investments. And that gets to another piece. Does anybody else feel the air of an energy renaissance? Does anybody else feel that there could be some expansion in commodities? There could be some expansion in energy? Oh, yes. So I think a part of the investment theme for 2025 is making sure that you're using that portfolio X-ray I keep talking about, not just to evaluate your market cap, not just to evaluate style, not just to evaluate geography, not just to really zone in on your effective duration, coupons, and positioning on the yield curve of your bonds, but you also need that portfolio X-ray to make sure you've got enough money in the sectors that are going to be rejuvenated by this new administration that's coming in that is pro-growth, pro-energy, U.S. energy independence and renaissance. And I want you to take advantage of that portfolio X-ray. It's complimentary, it's easy, and it's revealing. And remember, when you have a reveal, it's empowering because it's education. You get to know where you stand. And once you know where you stand, you can find ways to slowly make improvements because you can't afford to be average. You need to not just be better than average, you need to be optimal. So pick up the phone and give us a call, 833-964-PLAN. That's 833-964-PLAN. Go out to our website. That's getretiredstayretired.com, getretiredstayretired.com. I'm Craig Bolanos. You're listening to In the Know with VestGen Wealth Partners. See you after this important commercial break.
You want more In the Know radio? You want more In the Know radio? You can't handle more In the Know radio. Yeah, you can. Welcome back. Here's more with Craig and Leslie.
So we began today's show getting excited, getting rejuvenated, talking about unlocking our subconscious mind, our meaningful purpose, creating some big, hairy, audacious goals that we want to start to achieve and making those goals smart. And then we made sure that we talked about some of the fourth quarter takeaways from an investment discipline so that we could start seeking to do better and using our portfolio X-ray, that portfolio X-ray, to not take a snapshot, but to take a deeper, intimate dive so that you can start aligning your investments with what is going to be a pro-growth administration coming in at the end of January. Now, when you think about 2025, let's not kid ourselves. Let's be honest about where we are. Here's a quick snapshot of your outlook 2025. The economy. It is going to begin to cool. But that's only natural. The president's going to help keep us in a soft landing, but the economy is going to begin to cool. Why? Because consumers have been on a tear. You've been spending money. I've been spending money. People are racking up so much debt that at some point in time, you can't just buy the excess stuff. You're going to start being a little bit more choosy. Some people call it a little bit more disciplined. I don't think we're heading to frugal. People are just going to be a little bit more choosy. There does remain incredible pent-up demand for CapEx, especially on the business side. And I think with that renewal of the Tax Cut and Jobs Act, which is coming, yes, a full renewal of the Tax Cut and Jobs Act, you're going to see all this business spending unleashed, and that business spending is going to be unleashed exactly at the point in time the consumer is starting to taper off. And that's good because that's what's going to keep the economic party going. I think the new administration also brings with it, though, the potential for inflation to maybe pick up a bit, because when you have pro-growth policies, those are stimulative. Pro-growth policies are accretive. So it's only natural that the Federal Reserve maybe pauses because they know the pro-growth policies are coming, and you don't want to have a Federal Reserve cutting rates, which is accretive and stimulative. At the same point in time, you're getting stimulus and fiscal strategies coming out of DC, okay? Now, that uptick in inflation, that's not anyone's fault. It just is what it is. And we had this massive inflation reset. Things are coming in line, but I think it's just a matter of, hey, if you've been around for a while, like I have, I've lived through not one, not two, three large inflation resets. I don't agree that these needed to happen. I think there's compelling reasons why they happened, but it is what it is. You got to kind of let it work through. When I think about the outlook, we're talking about outlook 2025, soft landing stays intact, but there's a chance there's no landing. How wonderful would that be? Yes, I said no landing. Maybe the airplane does some in-flight refueling, so long as we get the pro-growth policies people are looking for. What does that translate into? I think it translates into modest stock gains. Now, that's not a terrible thing. There's nothing wrong with modest. There's nothing wrong with gains that are in the strong single digits. Now, could we see a third year in a row of back to back to back, like a full-on three-peat of double-digit growth in equity prices? Sure, we could. It's happened a handful of times in history, but I think it's more likely that stock growth, and yes, I said growth, I didn't say contraction, that stock growth just remains a little bit more muted in the single digits this year. But people really should be bracing for this. Bracing for bouts of volatility. Why? Because we're going to go through change. We're going to have a new president. We're going to have new Congress. We're going to have new geopolitics. All of these things are going to unfold, and none of those are bad. It just creates a little bit of uncertainty. And when there's uncertainty, when there's maybe a Fed pause, expect bouts of volatility because they're normal. In any given year, we should get at least two dips. I call those, 5+% corrections. In any given year, roughly every 14 months, there should be a correction of more than 10%. We're overdue for one. That would be healthy. But as long as the economy stays on firm footing, which it appears to be heading to, then those are buy the dip and reallocate in the correction. I think that should be exciting. And the opportunity set, as we look at that outlook for 2025, again, US focused, American focused, large caps, strong growth prospects, industrial, communication, service sector, and don't forget the deregulation of how it's going to help the financials, and specifically love preferred stock as an asset class. We've mentioned that before. when I think about layering in alternative investments, this is a great year to do it. I think that upon review meetings, we are going to be spending our time discussing with existing clients again, hey, we had back-to-back great years, 2023, 2024. To what degree do we want to stay invested, but do we reposition some chips on the table to focus more on income? Because interest rates, they are where they are. But I've talked time and time again about the plethora of opportunities that reside in private credit. I think there's going to be a lot of opportunity coming up in places like infrastructure, and even more opportunities in energy and industrial warehousing. And if you think about that energy component, you think about industrial warehousing, I mean, everything is about just-in-time inventory. You see the intermodal, that's the trucks coming off the highway. You see the big concrete bunkers. You see all of the doors that are there. Everyone's using delivery to their door. Retailers are using just-in-time delivery. Just lean into that trend. I don't think you need to buy office space. I don't think you need to buy these other things. But if you can get great, consistent income, benefit from depreciation, and have some secured asset investing, why shouldn't that be a part of your portfolio going into the year? And then you got to think about commodities and currencies. And lots of us are worried about a potential future digital dollar. Lots of us are worried about some of those things that could happen. But what's here right now is virtual currency. Some people call it cryptocurrency. Listen, it's on the map. Is it backed by anything? No. But you know what? It's been thoroughly invested in. I mean, look at all of the exchange-traded funds, ETFs, from BlackRock to Fidelity to Invesco. I can name the names that have made sizable investments tracking the spot price of Bitcoin and Ethereum soon to come. Think about the exchanges that trade futures and options on those products. Think about the support from the current administration relative to virtual currency, and even the acknowledgement you had just recently by the Federal Reserve, whether it was on script or off script, where they said yes. They acknowledge that some people view cryptocurrencies as a storage of value in the same way people have long viewed gold as a storage of value. I don't think that that's a recommendation to buy it. I think it just legitimizes the asset class is here to stay. And you know what? That makes it more investable. And think about this. I am not saying that this is going to happen, but what occurs if large 401k sponsors who happen to create exchange-traded products that track the spot price of cryptocurrency, what if they start building that into the asset allocation? What does that mean? That means you're going to have just oodles of money consistently flowing to support those spot prices. That's why I think if anyone's ever going to get involved, the time is probably to look at getting involved. And when we have those dips or we have those corrections, I think it's a great opportunity to start building positions with wide scale. And if you want to learn more about how to do that, you want to unpack, you want to learn from what we talk about on Sunday morning, we're a phone call away. 833-964-PLAN. That's 833-964-PLAN. Better yet, connect with me, connect with our team online. GetRetiredStayRetired.com. That's GetRetiredStayRetired.com. I'm Craig Bolanos, founder, VestGen Wealth Partners. More to come after the break.
You like omelets? Good, because Craig and Leslie are back, and they're about to crack some eggs of retirement knowledge all over Chicago. Back to In the Know Radio.
Hey, it's not just a new year and a new you. It's a new opportunity to manage your RMDs, required minimum distributions, better. Everybody knows about them, but maybe you now have them because once you're 73, they got to start coming out. But I think what's so important to remember is it's about planning. It's about planning, and higher investment returns equal what? higher investment returns equal higher RMDs. So have you taken a look yet, or now into January, at what your 2025 RMD projection is? And with you maybe being a year older, with your balances having grown, you might be surprised at how much you need to withdraw and how much more your tax liability is going to be. And while you should be happy that your balances grew, you should be happy that your tax return shows it to you, you might be unhappy if you're moving from the 10 or 12% bracket to 22%. You might be incredibly unhappy if these higher RMDs are moving you from 24% to the 32% marginal bracket. If you heard those numbers, moving from the 12% tax bracket to 22, jumping from the 24% tax bracket to 32, those aren't small deltas. That's 8 to 10 percentage points of marginal tax risk. Oh my heavens, we should be planning around these. Now, there's only so much you can do, but that's the reason that Roth conversions are so pivotal. Because a conversion is not an event. A conversion is a process. It is a disciplined, systematic, repeatable process where you evaluate the amount of money that you should move to have a predetermined outcome based on your crystal clear, compelling vision for your retirement future that you want to achieve. And then you supplement it by doing things the right way. And again, so many people give to charity. I was talking with our producer about all the wildfires in California. People support their church. Ministry needs money. There's all of these things we can talk about, but are you making sure that you don't just put money in the collection basket blindly? Maybe you should be dropping a check written against your IRA into the collection basket and doing qualified charitable distributions, because that would be smart to do. Maybe other people should be taking a look at QLACs, qualified longevity annuity contracts, to further reduce those RMDs if you've got the benefit of good health and good genes on your mind. Those are just some of the things I was thinking about with a public service message on RMDs for 2025. Run the calculations, because I think they're all going to be higher than a lot of people think based on another back-to-back year of good investment returns. But you know what? Something keeps everybody up at night. And I really think there's not one, not two, there's 4 questions that are keeping most pre-retirees up at night. Let's just unpack them. Let's speak about them. You know what the first thing that keeps people up at night is, when can I retire? Such a universal thing. When can I retire? Because when it's ambiguous, when it's undetermined, when it hasn't been measured and framed, you're just going along for the ride. And that's so uncomfortable. Because living a life by design can be so incredibly pleasurable. So here's what we need to do. We need you, if you haven't done so already, to do real retirement modeling. And that starts with a goals-based retirement plan. And once that goals-based retirement plan has us on a pathway to critical mass, then we evolve into a cash flow-based retirement simulation, because you got to be able to see exactly how retirement's going to be cash flow. It's within your control. 833-964-PLAN. 833-964-PLAN. GetRetiredStayRetired.com. GetRetiredStayRetired.com. Whether it's the portfolio X-ray we talked about this morning, or developing a goals-based that transitions into a cash flow-based retirement plan, let's get it created. And if you already have one, let's get it updated and optimized. You know what the second question is? Am I going to have enough money? Right? And it's kind of related to the first. The first question everyone asks themselves is, when can I retire? But a lot of people say, well, I have enough money. You deserve to know what the numbers are. Don't you deserve to know how big your nest egg needs to be in order for you to hit critical mass? And let me tell you why it's important. Because once you achieve that number, once you hit critical mass, that means you've gotten wealthy. See, and that's uncomfortable for people to talk about. You got wealthy. Wealthy to me means you put yourself in a financial position to do what you want to do, when you want to do it, on your own terms. That's about protecting choice. I didn't say you have to have a NetJet card and drive a Ferrari. It's just about protecting choice. But once you've achieved that financial security, you don't want to lose it. I mean, there's nothing worse than having to get financially secure twice. So I think when you know your number, that is then incredibly empowering because it puts you in a position to take strategies to protect it. Because remember, you can't just grow it, you got to protect it, which leads into question number 3. Everybody says, is my money going to last? Is my money going to last? That's a fear. When you have been working since you were 14 or working since you were 12, you have spent your entire life associating work with pay. And then to suddenly have to live off your resources, it's scary. It is scary. Let's just speak to it. But when you develop and utilize strategies that are TNT, tested in the trenches, you work with an advisory team that has a systematic, repeatable set of processes that happen to be tested in the trenches, it alleviates so much of that anxiety. And when you can build solutions then that follow those 3 pillars of retirement income that we talk about consistently and constantly, it's just great. 833-964-PLAN, getretired.stayretired.com. And the last question, we're talking about these 4 questions that everybody has. When can I retire? Am I going to have enough money? Will my money last? You want to know what other people ask themselves? If something happens to me, is my spouse going to be okay? Yeah, that's like getting really vulnerable, isn't it? If something happens to me, is my spouse going to be okay? Well, you know what? Let's just make it an affirmation. Let's put in tools and practices today so that if you are the primary manager of the finances, I didn't say the primary breadwinner. I just said, especially in couples, there's usually one person that does this, one person that does that. It is time to develop a proxy for you in case you are no longer here. Because part of having your spouse okay doesn't just mean having enough money. Part of a spouse being okay means there's a system that's in place that can continue after you're gone in order to maintain that financial security that you've worked so hard to develop. And you're going to want to have a team of professionals walking alongside you, because that day eventually comes for all of us. And if you've got someone that you love and they love you back, then I don't think it's just a desire. I think it's a duty. It's a responsibility to make sure that our spouse is okay once we become angels overnight. 833-964-PLAN, 833-964-PLAN. Go to our website, getretired.stayretired.com. That's getretired.stayretired.com. You're listening to In the Know with Craig Bolanos, co-founder, VestGen Wealth Partners. More to come after this break.
Hey, Windy City, get ready to be blown away with a hefty gust of more financial know-how, because we're back with In the Know Radio with Craig Bolanos.
So I think you know by now, or at least you suspect it, that there are always changes. And I would argue this year in 2025, there's big changes coming into the retirement planning landscape, and staying informed, boy, that's what it's all about. It's about making better financial decisions. I mean, there are changes that are coming into effect for the Secure Act 2.0, adjustments specifically to Medicare that are going to affect your healthcare costs. And of course, this year brings important shifts for every taxpayer in America, because we are going to see the Tax Cut and Jobs Act hopefully get renewed. The question is, to what degree is it going to get enhanced? And don't forget the showstopper, the game changer, the bill about Social Security fairness that just got signed into law by current President Biden, which has permanently repealed the government pension offset, the windfall elimination provision. So if you are a retired Illinois educator, CSRS, TRS, CPS, I am talking to you right now. Do you know the benefits of the elimination of the WEP, windfall elimination provision, the benefits of the elimination of the GPO, and how does that affect your future Social Security claiming strategy? How does that affect the claiming strategy you just made inside the last 12 months? And how should you be remodeling your retirement cash flow given the changes to Social Security for people who had non-covered pensions, like educators in a lot of this districts in the state of Illinois? If you want information, you want to learn more, you know you can. We've assembled a diverse group of professionals all coming together under a fiduciary standard to help you bring it all together. We believe in a family office for everyone. That traditional model of financial advice, it's not broken, but it's not optimal. You can't have your investment person here, your financial planner there, your estate attorney, your tax attorney, your insurance advisor, all of them unconnected, because it means the responsibility goes through you. When you can bring all of those professionals under one roof, under one company, true multidiscipline, and you get the benefit of having your legal, your tax, your investment, your planners all sit in one conference room with you, that's what we do. That is what we do well. That is the hallmark of VestGen Wealth Partners, is it is a family office for everybody. And if you want to learn more, you can and you should. 833-964-PLAN, 833-964-PLAN. Connect with me, Craig Bolanos, and my team. GetRetiredStayRetired.com. That's GetRetiredStayRetired.com.